All right, let's get right into ACI Worldwide's third quarter earnings. On its face, this was a classic beat and raise quarter, the kind investors love to see. But the way the stock has been acting, well, that tells a much more complicated story. So in this debrief, we're going to break down the numbers, the narrative from management, and figure out what it all means for the stock going forward. So here's the game plan. We'll kick things off with a quick snapshot of the results. Then we'll dive into the story management is telling everyone. After that, we'll look at the market context, which is crucial here. And we'll wrap it up with our official call on the stock and a pretty interesting trade idea. Okay, first things first, the results. The big headline here was a clear beat on both revenue and earnings. And yeah, that gave the stock a nice little pop right after the announcement, but it didn't last. And here's the number that really got people talking. Adjusted earnings per share came in a full 11 cents higher than what Wall Street was expecting. That's a solid beat, no two ways about it. Now, when you zoom out, the picture gets even more interesting. Revenue? Strong, up 7%, beating by over 17 million bucks. That adjusted EPS number of a really healthy 12%. But then you see the adjusted EBITDA growth, just 2%. That pretty modest margin expansion, that's a key piece of this puzzle. So just hang on to that thought. We're definitely going to come back to it. So that's the what. Now let's get into the why. What was management's story on the call? Well, they were definitely confident, framing this quarter as proof, not just a one-off good quarter, but proof that their whole strategy is working. Yeah, CEO Tom Warsop said it pretty plainly himself. The message they're sending is, hey, this isn't just a fluke. This is our multi-year plan paying off. They really want you to believe they're building a more predictable, more durable company for the long haul. And this right here, this is the engine room of that strategy. Recurring revenue, the holy grail for any software company, grew 10%, and it now makes up 62% of their entire business. This is what it's all about, moving away from those big, lumpy, one-time deals you can't always count on. Management was busy on the strategic front, too. It felt like they were just checking off boxes. They finally landed the first customer for their big new platform, ACI Connetic. They snapped up a small company to make that platform even better, faster. They jumped into crypto with a new partnership. And maybe the biggest signal of all, upping their share buyback to $500 million. That's management putting their money where their mouth is. And the cherry on top, they raised their guidance for the full year, both on revenue and on EBITDA. So if you're just listening to the company, the story sounds pretty much perfect, right? Results are great, the strategy's working, and the future looks even brighter. But, and this is a big but, the stock price is telling a totally different story. Despite all that good news, the stock has been a massive underperformer. This is the disconnect, the puzzle we really need to solve. Just look at this. You don't need to be a Wall Street pro to see what's going on here. Over the last year, the S&P 500 is up over 10%. ACI Worldwide is down over 20%. It's not just lagging the market, it's getting crushed by it. And it isn't even keeping up with other software companies, so what gives? Well, it all comes down to this big debate. On one side, you have the bulls. They're looking at the solid fundamentals, the recurring revenue growth, the new Connected win, the big buyback, and they're shouting that the stock is just plain undervalued. But on the other side, you've got the bears. And they're pointing at that ugly stock chart, the fact that the good news didn't make the stock stay up, and they're pointing right back to that modest 2% EBITDA growth we talked about. They're basically saying, yeah, we've heard this song before. Prove it to us. All right, so that brings us to our final section. Let's put all this together, land the plane, and figure out an actionable takeaway. So here's the billion-dollar question every investor is trying to answer. Is ACI Worldwide a value trap just waiting to disappoint again? Or is it a coiled spring, ready to pop? Is the market right to be so skeptical, or is it missing a real turnaround story? Our call on this is market perform. Look, we absolutely acknowledge the strong execution and the improvements they're making, but we also have to respect what the market is telling us. The stock is clearly in the penalty box, and one good quarter, frankly, isn't going to be enough to get it out. So, if we're sticking with that view, how could you actually trade it? Well, here's a wild but plausible idea. The core thesis is that ACIW is a good house in a tough neighborhood. So the strategy is a classic pairs trade. You go long ACIW because you believe in their specific story. But at the same time, you short another software company, maybe one that's way more expensive and not even profitable. The whole point here is to isolate your bet. You're trying to capture ACIW's potential comeback while protecting yourself in case the entire software sector takes a nosedive. So that's our debrief on ACI Worldwide's quarter. And as always, just a reminder that this is for informational purposes only. It is not financial advice.